Well, the stage is set and investors cheered. Federal Reserve Chair Jerome Powell today bolstered the case for a possible interest rate cut when policymakers meet at the end of the month. He suggested that lowering the benchmark rate would bolster growth and cited a number of uncertainties both here and around the globe. That lifted optimism on Wall Street, sending the Nasdaq to new highs and the S&P 500 briefly through the 3,000 mark before it pulled back. The Dow Jones Industrial Average rose 76 points to 26,860. The Nasdaq was up 60 and the S&P 500 gained 13. We have two reports tonight. Bob Pisani is at the New York Stock Exchange, but we begin with Steve Liesman and the Fed.
Fed Chairman Jerome Powell all but guaranteed the Federal Reserve will be cutting rates probably as soon as this month. That's from his semi-annual testimony in the House today. While he said the U.S. economy is in a good place, he emphasized trade uncertainty, global economic weakness, and low inflation as the more important factors guiding Fed policy.
Would it be fair to characterize, based on what we're seeing on those two factors specifically, that a strong case could be made for lowering?
So, yes, as I mentioned, we think that uncertainty around trade policy and also global growth, it's not all down to trade policy. There's something going on with growth around the world, particularly around manufacturing and investment and trade. And so that uncertainty is we think, weighing on the domestic economy.
Powell said he was not swayed by the strong jobs report this past Friday and, in fact, said the economic data had continued to disappoint. That leaves the most important question: how many rate cuts after July? Fed funds futures are pricing in a 100% chance of a rate cut in July. Markets see a 56% chance of yet a third rate cut in December for 75 basis points or 3/4 of a point of rate cuts this year.
A 25 basis point cut seems very likely. In fact, there's a decent probability they can consider a 50 basis point cut. They want to be aggressive, they want to be early, and they want to ensure that this is a recovery that can continue, and they're not waiting to see evidence of slowing in the data.
On a separate note, Powell was asked by Maxine Waters, the chair of the House Financial Services Committee, if he thought President Trump could fire him.
Mr. Chairman, if you got a call from the president today or tomorrow, and he said, "I'm firing you, pack up, it's time to go," what would you do?
Well, of course, I would not do that.
I can't hear you.
My answer would be no.
And you would not pack up and you would not leave?
No, ma'am.
Because you think the president doesn't have the authority? Is that why you would not leave?
I've kind of said what I've intended to say on the subject, and what I've said is that the law clearly gives me a 4-year term, and I fully intend to serve it.
Stocks and bonds both like the message from Powell on the outlook for interest rates. We'll see if he continues that message in testimony before the Senate tomorrow. For Nightly Business Report, I'm Steve Liesman.
And as Sue mentioned, investors did indeed like the Fed chief's message, especially early in the trading day when all three major indexes hit intraday highs. Bob Pisani's at the New York Stock Exchange.
Stocks marched higher, pushing the S&P 500 beyond 3,000 early on, though we did end well off of those levels. Federal Reserve Chair Jay Powell testified before the House Financial Services Committee today, reassuring the markets that there is indeed a case to be made for a rate cut later this month. In particular, Powell's comment that uncertainties have increased pushed the S&P into record highs, but we came off of those highs fairly quickly. We didn't end above 3,000. Right now, there's a clear consensus in the markets around a 25 basis point insurance cut for July, as some are calling it. Some investors likely would be surprised now if there was no rate cut, but others would be surprised if there was a 50 basis point rate cut. So the consensus is just 25. Sector winners today, big tech names like Micron, Cisco, Intel, and Microsoft. They're the same stocks that powered us to 3,000 from 2,000. Energy was another bright spot. Crude oil prices are knocking on the door at $60 a barrel here. Crude inventories showed a much bigger drawdown than expected. That helped the big oil names Exxon, Chevron, and Hess. One group left out of today's rally, bank stocks. JP Morgan, Fifth Third, all down as bond yields continue to drift lower. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.